Okay, welcome to a video which is a follow-on from a previous video looking at the difference between recession and depression. Just like to spend a few minutes thinking about some of the root causes of how a country can get stuck into a very prolonged downturn. Here's a selection of newspaper headlines from the last few days. Jobs being wiped out, the global economy is set for the sharpest downturn since the 1930s. Unemployment in the UK and the United States may be worse than in the Great Depression. Pretty pessimistic stuff. I was looking at a paper here showing the Dow Jones Industrial Average, the leading sort of US stock market indicator, plotted from 5 days prior to prominent historical crises, from 9/11 to the collapse of Lehman Brothers to the Great Depression. The red line here plots what's happened to the stock market, the Dow Jones, in the short term, since the kind of the immediate eruption, if you like, the awareness of this coronavirus crisis. Now, share prices typically do tend to recover, although they took a long time to recover, of course, after the Great Depression. The numbers last week were quite staggering for initial jobless claims in the United States. In the week ending the 20th of March, 3.2 million people made a claim for unemployment. Weekly initial claims rose to over 6.6 million in the week to the March the 27th. That's more than double the previous week's record. A staggering increase, and clearly something rather dramatic is happening in the United States economy at the moment. So what can cause recession? We're undoubtedly in a recession. Nobody disputes that. What can cause recession to become depression? Well, one of the factors is just the simple sheer scale of the shock that is hitting the world economy at the moment. It's huge. It's absolutely enormous. 1/3 of the world's population is in some form of lockdown. There is just a big shutdown of production. Huge surge in unemployment claims, as we've seen. A big fall in output, particularly in supply chain businesses. You know, the companies making food for restaurants and clothing for retailers. There's been already a sharp drop in confidence, which is going to hit investment. Keynesian negative multiplier effects will probably kick in and could amplify the size of the downturn. There are fears that the crisis may already be prompting a return to different forms of economic nationalism and protectionism. And business failures will become more and more prominent in the days and weeks to come, particularly given a high level of corporate debt and the collapse of cash flow, particularly in this case for small businesses. One of the ways of thinking about how a recession can turn into a depression is to think of an economy being hit by a series of waves. Let's say there could be 3, 4, possibly five waves. The first one is the sudden stop effect, the cardiac arrest for the economy. Shops, leisure centres, gyms, restaurants having to shut down and close down. People being told to stay at home, shelter in place, and practicing social distancing. So there's a kind of shock there in terms of a shutdown of production. That is now leading to a significant fall in employment and, of course, a big rise in unemployment. People's wage incomes have taken a hit, and with it, and of course, an associated fall in business and consumer confidence. And then the negative multiplier effects, if you like, is the third wave. People start delaying their spending. They increase their precautionary savings if they can, and businesses cut back and scale back on orders for component parts, raw materials, and in fact may well delay payment to the supply chain industries. So that is, if you like, the third wave. The fourth wave is when businesses take a long, cold, hard look at the situation, and then they decide themselves to scale back on their investment plans. So you get a fall in orders for new equipment. That affects businesses that make the capital goods. Supply chain industries will also retrench, in other words, cut back on their investment. And then the fifth wave, the next wave hitting the economy, is probably business failures going up, an increase in number of businesses seeking administration or filing for bankruptcy. That increases the bad debt risk in the financial system, which makes banks even more reluctant to lend to small and medium-sized enterprises and even bigger corporations. Can you see here that there's a potential for a downturn to become something significantly worse and potentially having kind of long-term scarring effects. A depression comes about when you have a big external negative shock, which then morphs into something much more substantial. Now, this has been quite negative. This has been quite depressing in many ways. What are the grounds for optimism? Let me pick out three. One is that there is a huge effort going on in research labs around the world, public and private sector oftentimes now cooperating. Hopefully the emergence of effective, verified, validated antibody testing allows more people to return to work, to earn an income, and eventually the lockdowns can be relaxed. Second sort of factor against these waves is the extreme levels of fiscal and monetary support mitigating some of the wider economic damage. Lessons in 2020 from 2008 and of course the Great Depression, policymakers have acted with remarkable speed. Whether or not those existing support policies are enough remains to be seen, probably not. So expect another surge in support by governments in many countries. And the third, if you like, positive from my perspective is the fact that businesses, in a capitalist system, businesses are incredibly adaptive. Many firms, corporations, small businesses will adapt hopefully quickly. We're seeing a surge in cooperative behaviour, which could well drive innovation, new business models. We're going to see how resilient this system is to this enormous shock that's been placed upon it. So there we have three positive outlooks against this, the fear that a big depression is on the way. Here's a fairly negative research report from David Bell and Danny Blanchflower at David Bell is at Stirling, Danny Blanchflower is at Dartmouth. They published an article in The Guardian today suggesting that unemployment in the UK will go up from 1.34 million to be around 5-6 million by the end of May 2020. That takes the unemployment rate to 21%. Now, given that 10% is mass unemployment, 21% will be a huge surge in unemployment. Hopefully some of that is temporary. Some of that is will work its way down again as an economy starts to recover. But the danger is, as they argue, that the longer the lockdown persists, the more company insolvencies there are, then the danger is, of course, that some of this unemployment could well become permanent or long-term in nature, which is much harder to address. Well, hopefully I've explained in this video how a recession can morph into a depression unless policymakers are really willing to push the boat out in terms of their support measures. Keep an eye on the news, look to see what's working and what isn't. This is going to be really important economics in the weeks and months ahead. Okay, thank you very much indeed.